Hi, I'm David Rath, Chief Investment Officer here at Continuum Wealth Advisors, and I wanted to put together a presentation that goes into some of the specifics about how we look at managing our portfolio so that if you're a current client with questions or if you're a prospect who is interested in our services, you can have a better understanding about how we approach the management of your investments. It is important to have a set of core principles whenever approaching a task, such as the management of money. As you can see on this slide, we have three that we like to adhere to. The first is the most important. We want to make you money without having you stress over the management of your money. And so this entails some of the things that we do behind the scenes where we are looking at the protection of the money during any sort of down market like we saw last year, but also we want to be positioned to grow your money over time. We do utilize a core and a tactical portfolio. The core portfolio is simply the bedrock of the portfolio. You can think of this as something that is going to be not set in stone, but it's going to be pretty static over time. Whereas the tactical portfolio, just as it sounds, is going to be positioned in a way that is going to take advantage of the market in good times, but protect your money in times of stress. We do take calculated risks with your investments. You can't get by without taking any risks because then you wouldn't be exposed to any long-term growth. So we take calculated risks within the portfolio in order to accomplish the goals that you see above. On an individual client basis, we operate with a few constraints in place. The first constraint is the need for any money in the short term. So if you are taking distributions from your money, we have certain rules that we follow and ways to structure the portfolio so that you are set for up to 2 years of distributions. So any market stress that we might encounter, just know that your money is safe and we will be able to meet those distributions without having to sell out of the market at an inopportune time. The second constraint is your individual tolerance for risk. Some people like to be risk takers. Some people prefer to be more conservative. So we take that into account as we manage individuals' portfolios. Finally, if you are a client that has money in a taxable account, taxes are a consideration. We don't make investment decisions based solely on taxes, but if we are planning on generating a taxable gain with any of the moves that we make above a certain amount, we will certainly let you know and make sure that it's okay with you before moving forward. Many people have been told that they should be invested in the stock market, but perhaps they have not been told why. Two of the bullet points that you see here are interrelated. We believe in the innovation of humans over long periods of time, which will eventually lead to corporate profits, which then will lead to appreciation within the stock market. And you can't have any of this without undertaking some level of risk, which is the third bullet point here. By bearing the risk that the market does not appreciate, the holders of equity or the holders of stocks within the market should be compensated for that risk that they're bearing. But along with risk comes the uncertainty of the future, which leads to fluctuations in prices that we see over time. How do we manage our core portfolio? We lean into certain investment styles, one that favors companies that are relatively smaller, less expensive, and more profitable than the overall market. There are periods of time where this is out of favor as an investment style, which is why we couple our core portfolio with our tactical process, which we will go into in later slides. Our tactical process is something that maybe not everybody is familiar with because most people are familiar with the buying and the holding and just riding out the ups and downs. Being tactical requires a bit more from a tool standpoint, and this is where we hope to add some value based on our core principles again, which is exposing your money to growth during the good times and then playing defense during the bad times. So the first question that we ask ourselves is, now a good time to be invested in the market? Is now a good time to be taking risks? We start the process by looking at every single week the 6 indicators which tell us, is now a good time or is now not a good time to be taking on risk within the investments. From that point, we want to identify those investments with what is known as strong momentum. In layman's terms, that just means we want things that are going up. And from there, we look at the relative strength of each investment. So we want things that are going up faster than the overall market. Now, why does momentum work, or why do we look at things that are showing positive returns in the short term? Well, humans, we like to buy things that are going up, and we like to sell things that are going down. We want immediate reward for what we are doing. And again, there's a lot of academic research that backs this up. So we start with a very simple process of identifying things that are going up, and from a relative standpoint, because we all want to do better than just a group of stocks that are part of an index, we want to buy things that are going up faster than the overall market. Having any sort of tactical process in place means that there should be a well-defined set of rules that tells you when you are wrong with your investment. If you expect to be right 100% of the time, that is an unrealistic assumption, and so we need to have things that will tell us when to sell so that we can move on to greener pastures. And so we have a well-defined set of rules that we use for our investment strategy that tells us when is time to cut bait and move on to better things. We are investing based on probabilities. Again, nothing even close is going to get 100% accuracy. And so what we're trying to do is put our clients' money in the best possible probability of success, and then monitor those investments, and based on the rules that we have in place, use those processes to continue to monitor and adjust over time. One important distinction is we are not bottom fishers. And so what that means, we're not trying to buy at the absolute bottom. We are primarily concerned with getting the 80% move in the middle. So we're not going to buy at the bottom and sell at the top. That's an unrealistic assumption, but we want to capture the trends of the market as they're occurring and get the 80% of the middle of the move. Risk management is the #1 priority in my job, and risk can be defined in a few different ways, but to me, risk means the chance that somebody does not achieve what they're trying to do. And for most of our clients, that is the ability to live a comfortable retirement. So with every decision that I make, I have to evaluate all the risks that are entailed, and that means both on the downside and on the upside. Risk is something that most people don't associate with the upside, but if we just sold out of everything and went to cash and the market went up 20%, that would be a risk of sitting in cash. And so I have to evaluate the risks of every single decision that we make to make sure that we are being positioned appropriately. Again, this does not mean that we're not taking risks, because you have to take some risk within your investments in order to position it for that long-term growth. We just try to be smart about the way that we do so. Okay, so that all sounds good, but what can you expect? Meaning, if you are looking at the activity in your account, or you're getting confirmations of trades that were executed, you might be curious as far as what is going on. Hopefully this slideshow has done a decent job of explaining the core principles of what we do and why we do it, but it should be said that there's going to be maybe more activity than you are either accustomed to or were expecting before you signed on with us. We evaluate the tactical side of the portfolio on a weekly basis. This does not mean that we are making changes every week. Sometimes we get into a position and based on our rules, we have to get out within a few weeks. Ideally, we would buy and hold and watch those profits accumulate, but it doesn't work out like that. So we evaluate on a weekly basis. That doesn't mean that we make changes every week. We just evaluate it every Monday as a team. And the core part of the portfolio, as I mentioned before, is going to be a bit more stagnant Doesn't mean that we're not monitoring it, but the changes to that side of the portfolio are less frequent. With that, I hope that you've enjoyed this presentation about our portfolio process. If you have any questions, our phone lines are always open. You can always reach out to me directly via email. Whatever it is, I'm more than happy to go into more depth with anything that I've discussed here. Thank you for your time.